so if you go to our website, you will say empowering people leads to extraordinary performance.
Right, I hadn't seen that. That's a great line.
And so that was the line I brought. And people say, well, where did you get that from? And I'll say I got it from my mother and father. Because when I was 15 years old, my father went back to school. We lived on a farm, 6 kids. Yeah. And my father had no choice but to turn the farm over to my brothers and my sisters. And we had to run this farm for 3-4 years while he went back and got his university degree. Right. So he empowered us.
Yeah.
And so when I was in the oil and gas business, came in the mining business, we empower people to do. We never compromise safety, and you never abdicate responsibility. But we say to people, look, if you see a better way of doing things that doesn't compromise safety, do it. And that has been extraordinary. And the other thing that was happening, you talk about costs. The other thing that was happening at IAMGOLD, because of the run in the gold price, was that we were 95% long cycle focused. So we spent in 2012 $167 million looking for pachyderms, looking for the deposit that was going to eliminate our depletion. It was insanity. Right. And so we took a flamethrower to that number.
What was the check moment? You're like, hey guys, wait a minute, this is not working. I mean, that's a lot of money.
Yeah.
Right? So you must have just gone, we need to change. So, yeah. I mean, what was that conversation?
Well,
who was that between?
It starts with the change in leadership, where if they don't come on side, and I was lucky that people came on side pretty quickly. We're blessed with smart, hardworking people. Yeah. But we had some pockets where people believed that they had to keep rolling the dice or we would die. And we went to a short cycle focus. So around Rosabelle and Suriname, we started to do near mining exploration. We expanded our concession. Essakane, same thing. Westwood. And we had some focus on long cycle, which was Côté. And you have to have some long cycle. But we turned it around completely. We went for a much more emphasis on the short cycle.
Right. So I'm liking this short cycle idea because it's small controllable steps in your evolution, as it were, and clearly working. You're sitting on a lot of cash today. Right. You're not spending it. Okay. So we got to bring this back to IAMGOLD, regularly, but I do want to talk more about your thinking because that's fascinating. So IAMGOLD last year compared to this year. It's obviously
very tough.
Yeah, it's been a tough year.
We're skating through first quarter last year, best quarter in the company's history. We were trading at 850 Canadian. We won the finance deal of the year at PDAC with Sumitomo.
Right.
I won, which is always a curse, I think. I won our CEO of the year, highest returns for pay of any CEO in Canada, 100 CEOs.
All good. You're the top of this mountain, looking down.
Oh God! And
then it hits you.
And then we started to get headwinds at Rosabelle. Yeah. Third quarter was tough.
Headwinds were caused by
labor issues.
Right.
The guys saw how well the company is doing, and then wanted a piece of it.
The curse of money.
Oh yeah. And the other headwind was gold price fell from 1350 to 1180.
And that makes a difference because that's people need to remember that's a large percentage of your margin just going there.
We're a very high cost producer relative to others.
So as a percentage of your margin, that $200 that pretty much wipes out a lot.
Here's the other thing that affects us. 35% of our shares are held by passive investors.
So they're sitting there holding these things, which affects liquidity, volume, trading, etc. Okay.
Don't vote. Don't send in proxies. Don't take meetings.
Yeah.
High frequency traders that look at your quarterly results and either buy or sell on it. And by the third quarter, we got hit hard.
Yeah.
Our quarter was
you know who buying?
Pardon?
Do you know who by?
Oh, I do.
Okay.
And I don't want to mention.
Sure. But
they're still shareholders.
But did you have a conversation?
They don't talk to you.
Right. They don't have to.
They don't.
Yeah.
It's very simple.
You know the rules.
Yeah. They show their shareholdings.
Yeah.
And as they say, they don't take meetings. So we behave very well.
Yeah.
Whether it's high gold prices or low gold prices, we have a very high volume of trading, and they love us.
Yeah.
They model us, and if we're not in that zone, they'll sell us. And
that's what happened.
That's what happened.
Right.
We had one quant fund at the end of the third quarter sell in total 12 million shares, literally in a week. And we dropped 21%.
Yeah, I bet.
Choom, like that.
Because someone thought someone knew something.
And then you set off circuit breakers.
For sure.
And you were in the game.
Yeah, been there, done it. But then the retail go, what's happening?
Yeah, the retail say, well, nothing's changed. Why is this happening?
Yeah, so they don't understand why, but it sets off a series of events.
Oh, it sets off panic.
Yeah.
Because you're a retail investor
right.
who has made a lot of money with the company, and all of a sudden, you're losing.
Yeah. But anyway, so those things happen. So last year, coming through this year, you are where you are today.
Right.
Okay. So how would you grade yourself in terms of last year? Was it all out of your control? Could you have done something? What would you have done differently?
It's never totally out of your control.
Well, the things you can control and the things you can't. So I guess. So what are those things?
I'm just saying that, the gold price is out of our control.
Sure.
Should we have been more proactive? Yes.
Right. With what?
Is that my responsibility? Yes. Did I drop the football? Yes.
Okay.
So what I should have done at the third quarter is reacted quicker.
Right.
And the market was sending signals around self-funding. The market was sending signals about short cycle, more reinforced short cycle.
Was that behavior then new to you, or had you seen that before?
It was completely new.
Right. So hence what's going on?
We had a guy come in.
So if it happens next quarter, you're going to do something?
Well, right now, we had a guy come in hard.
Yeah.
On the long cycle side of the equation.
Right.
Cote. So he came in hard. And we put out the feasibility study. We have Sumitomo come in. This is a coup. Nobody's ever done this. We have Sumitomo come in for 30% of the project, put up $200 million US. People were applauding.
Yeah.
People were standing up, giving us
Let's do the deal. Yeah.
Oh my God.
Right.
That was in the first quarter last year. By the third quarter, and the gold price falling, and the margin squeezed, and the fact that our cash might be drawn on the balance sheet, they got scared. And they started to send us messages, don't build Cote, which was completely opposite to why they bought the shares.
So tell people quickly about Cote, because it's a pretty big resource, right?
13 million ounces,
right.
6 kilometers off the highway, low grade, a gram a ton, bulk tonnage.
Yeah.
Literally
it's shifting dirt,
beautiful,
right?
Beautiful.
Yeah, simple process.
Beautiful deposit.
Right.
Unfortunately, we haven't got a good set of examples in Canada to say successful. Rainy River, Detour,
right.
Even Malartic in the beginning,
yeah.
Stumbled. It's a great mine
right.
now, but they stumbled. So Canadian history doesn't reinforce. There was no success to reinforce. Sure. So shareholders looked at it, analysts looked at it and said, go to the sidelines. Don't keep your cash, go to 100% short cycle. Free cash flow is everything. Nobody's interested in giving you money to build this if you have an overrun, and put it on the shelf.
What were the capex of?
$1 billion.
$1 billion. Okay, so it's not nothing. But was there a bit of you that said, well, actually, maybe that makes sense? Or you're like thinking, well, come on, guys, 13 million ounces here.
Oh, it made sense. But
so if you built it, how long would you be when would you be in production?
2 years.
Okay.
It's not bad.
Yeah.
But you've got it's human emotion, Matt. We're working on this. We bought this in 2012.
So they want to see.
Well, we got a team. We have 7 people from Sumitomo sitting in our Montreal office, seconded on the project. We've made commitments to our partners. Sumitomo is a tremendous partner.
Great.
High skilled partner who have a huge positive reputation, who love this project.
So where is it now?
It's on the shelf.
So you had to listen to these guys, right?
Or they punish you.
Yeah.
And they punished us.
Yeah.
So when we...
Well, hang on. So you listened to them and they still punished you?
No, listen to what happened. So it was kind of unique. They're messaging me and us. They're saying, don't build it.
Right.
We don't make any commitment.
Yeah.
But because of our low margin situation, during the Christmas holidays, gold ran up above $1,300.
Remember? Yeah.
Remember?
Yeah.
We had the chance to put on a hedge for 150,000 ounces of production.
Right.
It was called a prepay. So we put on a hedge for 150,000 ounces, costless between, at that time, $1,300 and $1,500. So anything below 1,300, we get paid.
Yep.
Anything in the middle, nothing happens. We get paid spot. Anything above 1,500, we pay. Which, God, if it went to 1,500, it would be the least of my work.
Yeah, you would pay it. That's good.
So we received 107. We will receive 175 million US for production that doesn't have to be delivered till 2022.
Right. Okay.
Cost is 5.38%. Very low.
Take that. Yeah.
All that is great. Board approves it, and we think we have 700 million in cash. We add another 200 million. We have a cushion. Our shareholders are going to embrace this.
Yeah.
Let's go ahead with Cote. We don't announce Cote, but we do this financing deal.
Yeah.
Market sees it as a
signal
catalyst.
Right. Yeah.
We're going to announce Cote. Our stock dropped 22% in 2 days.
That's a hit. That's a big hit.
Every major shareholder phoned me and said, "You're going ahead with Cote." I said, "We haven't decided. We're not deciding until March." They said, "Well, why did you do this?" I said, "Because we could."
Right.
And it gives us insurance. And they said, "Don't go ahead with Cote." 2 weeks later, we announced we're going to put Cote on the shelf. Stock recovered everything it lost.
Okay.
Everything.
Same guys. Same guys. Yes. That's a heck of a message. Again, just finishing up, and I say, so you'd have done that differently.
Yes.
Anything else? Any other learnings?
I would say the major learning is listen to your shareholders. I mean, they're not always going to be right, but they're the ones putting up the money. And don't surprise. And I think I wasn't insightful enough to realize I was going to surprise them. And maybe that sounds a little bit stupid. But I honestly thought, and our management team and board honestly thought, that this fantastic deal we did, one of a kind deal, was going to be something that would allow us to move ahead.
Yeah.
And we didn't bounce it off anybody because we had to act so quickly. The window was so short. To get it executed wasn't easy, and we got it executed. We were actually so proud of ourselves that when we did it and announced it, we thought our stock was going to go up
work.
10%.
Right.
And it dropped 22%.
Yeah.
So talk about misreading.
Big lesson. You don't make that mistake twice, right?
Yeah.
Okay. So that's fascinating, by the way.
Yeah.
That's a real insight.
Yeah.
Now, I've had the words workaholic and similar thrown at you when I ask someone what you're like. So you travel a lot. You're on a plane a lot. What's a typical day for you?
I'm up at 5:30 and I work hard, and I've always worked hard, and I'm in the office every weekend, and I love what I do.
You enjoy it?
I love my job.
Right. This
is a very tough business right now. It's lost its luster, and it'll come back. It's cyclical. I asked this fellow who I knew extremely well in New York, who eventually passed away at the age of 77, worked all his life. So when he had cancer, and I went to the hospice in New York, and I said, any advice in terms of your success? He said to me, "Steve, stay at the table as long as you can.
Yeah.
He said, because we're in a business, and he was in the resource business.
Yeah.
There will come a point where you can harvest all of that hard work, but you got to be at the table. So strong balance sheet, which we have, good reserves, which we have, which we can monetize, and the ability to stay at the table as long as you can. Now, we become vulnerable, which is where these rumors come from. We have such a powerful inventory of reserves now, 18 million ounces. That are very low cost from a, you know.
And they're all similar ore bodies, are they? Or do you have different things going on?
In Rosabelle, over 2 grams a ton, 20 kilometers from the mill. I mean, it's 2 million ounce resource. Cote, 13 million ounces, as I said.
But in terms of the skill sets required to, you've got all the necessary skill sets. All necessary.
Yeah, I'm not going to call it easy, but
right.
It isn't anything we haven't done before.
Okay.
So when you look at the fact that world reserves, gold reserves, are dropping exponentially, we're replacing 20% of what we produce.
Yeah.
Gold production is still very high, but reserves have dropped tremendously. We become vulnerable.
Yeah.
And people ask me all the time, are you a target? Absolutely, we're a target. Absolutely, people are looking at us. Absolutely, you know, things could happen. We don't comment on it, but you know, obviously, when you have that kind of reserve base, 850,000 ounces of production, and the skill sets that we have, and a land package that we've built now, that it's all short cycle driven in most respects. This is a very attractive, and people aren't interested in gold now, but the smart players, the long-term players, will look at this and say, whoa, this doesn't happen every day.
Yeah.
So that's how a lot of the rumors start.